It has been a very long time since I've just sat down and done a pure technical analysis wrap-up video. So that's what we're going to do today. Now, the reason that I haven't doesn't have anything to really do with anything when it comes to, my wanting to do them or my ability to do them or anything like that. It's just that there's nothing to do, because if the market's just going to go up all the time, every day, then from a grand scheme of things, a wide kind of breadth of data, there's not much to do. And that's kind of what I wanted to rant about here quickly to begin with. There's people out there, and I get it as someone who creates content, and I use that content to drive people to StatsEdgeTrading.com, which if you haven't checked out, you should become systematic in your trading and investing. There's an impulse sometimes that I have to fight. I know a lot of people have to fight to say, if there's nothing to do, you do nothing and you talk about nothing. So let's put this in the context of like news, right? In a perfect world, you would every now and then, your local news host would have the credits roll, and he'd pop in. He goes, not really much happened today. Here's like the one story that was interesting, and then just fade to black. And in very active markets and high volatility markets, that's when we spend a lot of time looking at the charts and trying to figure out what's kind of happening next. In slow uptrends, as a technician, in theory, we should be doing nothing, because what we're trying to do in technical analysis is we're trying to look at trends, and we are trying to ride those trends. And then we're looking for areas that price respected in the past, support and resistance zones, interesting candles, things like that. But if you're in a solid uptrend that's just hitting new all-time high after new all-time high, none of those things are happening. You're not getting a big idea of where price could potentially turn, because there's no area like that. So people do a lot of kind of inferring. Whereas for me, if you're in a trend, you just kind of hang out in that trend. Now, that's not to say there's not a lot of trading to do, right? There's, generally speaking, between 10 or 15 ideas that we are looking to trade each and every week, month, right? We day trade, we have long-term investments, we have all of that. And again, if you're interested in that, come on over to Stats Edge Trading here. And if you're interested, you can look at all these different systems and different time frames, and you can click on the more details tab and read a lot of nerdy reports on it. And if you're not, check out the free trading course and the free intro, the trading plan course, where I teach you to build a trading plan. And what that gets you signed up to the free email list. So I'll just email you every time I make a video so you guys don't miss it. So also, right, again, there's a lot of trading to do. I've anonymized this, but it was actually just posted a few minutes ago in our chat, so I thought I'd bring about it. It's like I've joined StatsEdge in August this year, and I've averaged about 1.5% return per month from the day in swing trades, which is awesome. I love to hear it, because really what's been shining this year is the investment strategies, because the market's just been ripping. You can see the user here is tracking all his data like he should, of what trades are working, what trades aren't, that kind of thing. And yeah, just really, really great to see. So just because I say there's nothing to really talk about when it comes to broader markets or indexes, doesn't mean there's nothing to do. We're still doing a lot. We're still trading very, very frequently, but there's just not a lot to make content about when it comes to broad technical analysis. But something happened. So I think we're gonna zoom in, and we're gonna talk about that a little bit more deeply here. So first of all, what am I talking about? Well, we had this big crash, right? And I made a lot of comments on Twitter and all of that, you know, I troll on the perma bears, the people that every time the market down ticks, they go, oh, that was it. Make sure you're, closing things down. What's happening with, hey, this bad thing is happening in the world. This politician I don't like is saying something, all of these different things. I just looked at that and say, okay, we had a nice strong push up, and now we've pulled back. Everything inside this zone was just nonsense to me. That's why I really didn't make a video too much about the markets. But today, so far, it is about noon. We've gapped up, and we've held that gap up outside of this range. So now we're in the phase where we're back to new highs. So what I wanted to do in this video is just do a very simple, common top-down analysis type of approach. So I've just built this very simple list here. I just went to actually the Perplexity browser. I can actually show you guys how I did this. Comet, I think it's called. Oh, I don't have that open. Sorry. But I just went and I just typed in, hey, give me all of the SPY sectors, the ETFs or the SPY sectors, comma, separated by a comma. Then you can just hit the plus button here in TradingView. You can paste in that string of text and it just adds them. So you don't need to add them all individually. Because now that we're breaking out, what I want to look at is I want to look at what potentially is looking the best, what we could take trades off of. So here's all the individual SPY sectors. So we're going to kind of go through those one by one. And we're going to keep in context that we had a breakout, a big surge and a breakout after this nice consolidation. You know, it doesn't feel good in the moment when you see a candle that looks like this, but after this nice consolidation, we had a huge breakout and then a continuation from there. And the last time that happened was kind of in this zone right here. You can see that was the spring pad for a little bit of a launch higher. And then also it happened back here, and that was the spring pad for a launch higher. Now, if we go through the sectors, XLK is obviously the biggest one and the most important one, because if it's the biggest sector, it's going to have the most impact on the overall markets. And as we know, with markets moving, it's going to have the most impact on, you know, whether people are happy or sad about what's happening out there in the world. So the fact that this is continuing, I think, is definitely a great thing that we want to make sure that we're looking at. So technology is popping up. I'm just bringing over a chart here. You can see this is the breakdown of the S&P 500, and you can see most of it's technology, a lot of it's healthcare, financials, and then the rest, we could say. So with this breaking out and making new all-time highs, that's great. That's confirmatory. Not a whole lot I'm looking to do there, right? The same as the Mag 7. So we got Apple popping back up to all-time highs. This chart looks great. We already own Apple in our systems, so this one looks fantastic. Google, same thing, popping up to new all-time highs. So we're having the big guys confirm this breakout. Financials, nice little bounce. Financials were one of the first to recover after the tariff tantrum. And now they've been holding this $51, $52 area for a long time. What I'm watching on financials is this potential downtrend break. If you just take and draw a very simple downtrend line, we're sitting almost just there. So we want to see a nice surge over another couple days, because that will push us higher. And then healthcare. So I've been talking a lot about healthcare. I really like the look of healthcare here as a whole, just because of all of the fact that it is behind the times, right? If we zoom out, this is the all-time high on healthcare. We haven't quite gotten there. So we have financials, they hit all-time highs long ago after the tariff tantrum. And then you have technology that's been the leader here. Now, this is the last big sector of that pie chart I showed you. There's the three big sectors. This is the last of that big one. So if we can get a push higher here in this area, then I think that's just going to be great for the overall markets, because if healthcare starts to participate, that's the three big guys that are pushing there with us. Communications, this is less important, but not looking horrible. Energy is 3% of the index. So when I'm looking at these smaller ones, I'm just looking for ones that don't look like they're kind of falling apart. A consumer discretionary doesn't even make sense for XLY, because it's mostly Tesla and Amazon. So you can just take a look at those two. And Amazon's doing fantastic today. I think Tesla's still struggling just a little bit here on the day as well, but this is a nice looking chart on Tesla. Like a true Canadian here with Tim Hortons. XLI. Industrials, this is one of the best looking charts for me from a sector point of view. Again, with industrials, think Caterpillar, think things like that, and we are holding really perfectly right in this consolidation range. So that's what we want to see, but we'd like to see it stick the landing. This one's actually coming in a little bit, where if we look at the SPY, it's sitting right at highs of the days. So we have to keep an eye on that. Utilities are a bit weird because they're normally defensive, but now they're AI related. So I don't know what to make of this sector. However, if you just look at this chart, this is looking confirmatory. Staples is what you expect. XLP, consumer staples, this is what you expect to be weak in a really strong market, because consumer staples are, your Pepsis, your Cokes, your General Mills, things like this, where people are normally buying those things when markets are bad because it's a flight to safety. They're generally not buying them when everyone's excited to place trades. Real estate, this is another one that is very far from all-time highs because of interest rate. However, this very long base here in real estate looks like this could potentially break out. And last but not least is materials, which has been, again, lagging here in a range for a very long period of time, but holding up. So last thing that I usually just look at quickly is Bitcoin. which is up a little bit on the day, but more or less just flat, right? Down 0.01%. So I hope you got some value from that. Again, this is the process I go through. I go through these every night, and I process every night, and then on the weekends, and then every month I do this with a little bit more expanded, but that's the main walk around the markets that I want to do. You can see it only takes a few minutes, but I think it's important to do, especially when emotions are high, markets get a little bit volatile. You want to just step back and you want to say, okay, how much damage is actually really being done here? Is this something that I should actually worry about? And in this case, certainly wasn't the case, because we continue to march to new highs. Now, what do I need to see from the market to just, undo the perma bear or the perma bull attitude? Well, I'd like to see my commitment to traders data back, but I don't think I get that until the government reopens. But let's say we fail in here. Well, if we just fail and dip a little bit, that doesn't worry me. If we fail hard and maybe we break this low right here, or we start to get into these lows right here, this is where I'll start to reconsider this incredibly bullish stance, because I've bought every dip on the way up, and it's been an amazing, amazing year. I have some accounts that are up almost triple digit percentages. And the amazing year that I've had here has just been a lot of, we have mean reversion systems, and they buy stocks like BPOP. This is one that we bought yesterday, right? It's buying healthy companies, strong companies as we pull back, so that, being able to buy this and make, 5% in a day on a regional bank has been an amazing, amazing trading environment for us. But I always just want to keep an eye for potentially what could reverse us, and then say, okay, if I don't see that, I want to maintain my fully bullish stance. And as long as we're holding above and we're not getting anywhere near, say, this low right here, we want to do, we want to remain bullish. And then also an anchored VWAP from this level right here makes a lot of sense. A lot of emotions in this zone. You can see we had a very hard time closing below this anchored VWAP. Every time we've come in and touched it, like right here and then back here, we bleed below it a bit, and then we're right back up the next day or so. So any sort of sustained move under this, that's where I start to reevaluate. So again, just a little, felt like a long time since I've just kind of walked through the market with you guys. So that was something that I wanted to do. And I hope you guys found some value. And if you did, go on over to StatsEdgeTrading.com. Give systematic trading and investing a chance, instead of just drawing lines on a chart and hoping what's going to go up or down. You can take the setups that I provide every weekend and that have a statistical backing that you can go and look on my website and say, this is right this percentage of the time and makes this much when it's right and loses that much. You can have all the data going back 25 years and then apply technical analysis to you want, like that user that I showed you there. And again, thank you guys. Until I talk to you next time, get away from the screens.